enhance your retirement savings with SRS. My name is Sun Lim. I just want to make a note on this very important disclaimer slide. I want to make sure that whatever that we're going to be discussing for tonight is to be taken as for educational purpose only and not to be taken as investment advice. So let's get underway, shall we? So with that disclaimer, just for those who do not know me, I have been in the investment management business for over 20 years now. And virtually any asset class I have gone through, including money broking, merchant banking, bond sales, trading, investment planning, and management of a wealth management sales team. And we do all sorts of wealth management products, including insurance sales, structured notes, and all the banking products involved as well. Currently, I'm Associate Director of an independent financial advisor, and I work with both individual as well as institutional investor to really provide customers advice on optimal asset allocation. I'm also founder and principal of Equitiespedia Private Limited. If you want to know more, check me out on my LinkedIn profile or visit me on the website. I'm sure Google will help me out with that. So tonight's topic is about SRS, Supplementary Retirement Scheme. Now, this scheme was launched in the year 2001. It supplements the CPF scheme, the Central Provident Fund, for our retirement fund. However, unlike the CPF scheme, participation in SRS is voluntary. It is not compulsory. Now, the key benefits of SRS. Firstly, contribution to SRS are eligible for tax relief. And investment returns are accumulated tax-free, with the exception of Singapore dividend, from which tax is deducted or deductible by the payer company under Section 44 of the Income Tax Act. Also, only 50% of the withdrawal from SRS are taxable at retirement. In a few slides' time, we're going to see how that works to your advantage. Now, the eligibility criteria. All Singaporean, Singapore PR, and foreigners are eligible. You must at least be 18 years old and of sound mind. You cannot be an undischarged bankrupt. And lastly, you must not be mentally disordered, and you are capable of managing yourself and your own affair. The condition for SRS contribution: earn income either from employment, from trade, from business, profession, or vocation, but excludes passively earned income, such as rental or interest income. Also, employers can make SRS contributions on your behalf. That is something that many people do not know. And how do you start? Well, you can open only one SRS account at any of the participating banks. When I say any of the participating banks, it's just 3. And no prize for guessing which 3 banks. You can go to DBS, OCBC, or UOB. Now, all SRS contribution are to be made in cash. And this contribution can be made anytime on or before 31st December of each year to qualify for the tax relief. Now, making the contribution every single year to qualify for the tax relief is only the first step, and you reap an immediate tax saving upfront. So that is one very right step, but the second step that you have to do is to make sure that you invest your SRS account. Now, by sitting at the account at 0.05%, you should know that it's eating away at your purchasing power. All right, so that's one of the things that you need to do once you make the contribution. Now, benefits of SRS account, tax relief for SRS contribution. Each dollar of SRS contribution will reduce your chargeable income by $1. An investment gain will accumulate tax-free in SRS. Tax payable only when you withdraw from SRS. And if you withdraw upon retirement, only 50% of the saving withdrawal will be subject to tax. And one more thing is that you can spread this withdrawal up to 10 years or more if the statutory retirement age of 62 years increases. Finally, take note that SRS account cannot be used as collateral. So if you go out there and intend to take a loan or to purchase, say, a property, and you want to pledge some of your assets to be used as collateral, please take note that the SRS account cannot be used as collateral. SRS contribution rate and income base is what I want to touch on next. Now, the thing to remember is that Singaporean and Singapore PR, it is 15% of the absolute income base. I'll come back to explain and give you an exact amount what that is in a short while. And for foreigner, it's 35%. Now, SRS contribution cap is determined by multiplying the appropriate contribution rate. In this case, it's either 15% or 35% by the absolute income base, which is 102,000. Now, how this number is arrived at is at the moment, it's capped at $6,000 multiplied by 17 months. Now, this number could change. In the future, MOF might announce a change to this number by raising, say, the income cap to 6,500. Then, of course, the absolute income base would change as well. But at the moment, the cap stays at $6,000 multiplied by 17 months. And what that means is that for Singaporean and PR, the maximum contribution per year is $15,300. And if you are a foreigner, the contribution will be $35,700. Next, I want to touch on about the withdrawal rules. Firstly, you can withdraw any amount, anytime. However, okay, there are rules that you need to fulfill. Firstly, only 50% will be taxed at the marginal tax rate if your withdrawal are made, and this is the key point, on or after the statutory retirement age of 62. So this is the first thing that you must qualify if you want to qualify for the 50% taxation at the marginal tax rate. If you don't qualify for that, you can still have a 50% tax at marginal tax rate on medical grounds, right? On medical grounds means you can be certified that you are, critically ill and probably not much time left, right? Also, upon death, that goes without saying, or you can make a full withdrawal if you are a foreigner who has an SRS account for at least 10 years since the first SRS contribution. Now, if withdrawal is made before the statutory retirement age, 100% will be taxed at the marginal tax rate. So this point is that, if you don't qualify for the above and you still go ahead and make a withdrawal, 100% will be taxed at the marginal tax rate. On top of that, there will be a 5% tax penalty imposed, unless, of course, it is due to death, permanent incapacity, bankruptcy, or you make a full withdrawal because you are a foreigner and you have already made at least 10 years contribution and you have decided to leave the country, right? Now, the 10-year withdrawal period does not apply to life annuities. 50% tax concession will apply to annuity streams in perpetuity. Residual in SRS at the end of the withdrawal period will be taxed at 50%. So what that means is that if, let's say, you would make your withdrawal after 10 years and there's still, leftover money, you time your withdrawal, and then after that, there's still a sum of it left over, that residual amount will be taxed at 50%. For foreigner and PR, withholding tax will be imposed on withdrawal at the tax rate prevailing at the time of withdrawal, and the amount of cash received will be less than the amount withdrawn as a result of this withholding tax. So do bear in mind some of this tiny technicality.